Hello, everyone. Hi, press.
Hey, how you doing, Miss Lisa?
Pretty good. Oh, I'm back to Miss Lisa again today. Oh boy. Why am I getting a miss today, press? You're in a miss mood?
Yeah.
Why am I getting a miss today, oh press? Dear. Wait a second. Mood? Wait a second. The lag. So how's your week been going, press?
Pretty good, pretty good. I can't
Hanging in
complain.
there? Hanging in there?
Yeah.
Right. So, Prez is usually the one of us that chooses the topic of the week. What's our topic for today, Prez?
Today we're going to be talking about where we currently are in the market, as well as how myself and Lisa, will be navigating the current market conditions, and basically give you guys some encouragement on staying consistent and just getting started if you haven't started already.
All right. All right. So, consistent. So let's start with that. So I think that being consistent is a huge obstacle for people. They get started, and before you know it, they're taking some days off or weeks off or whatever. Or once they build up their 401k, they're looking at it as a place for a loan when something big happens. So what do you think about what I'm saying here? I'm lucky enough to never have dipped into my 401k for an emergency, but over the years, I definitely have done a lot of things. I've had to. Let me tell you this: when I was on my looking for my first home, my realtor would say, "Okay, here we go on Lisa's quest for." The worst house in the best neighborhood. So I was looking for a fixer upper. I just wanted the neighborhood was more important to me than the condition of the house. I had to find that balance because my budget was what it was. But over the years, with having to fix up the house, I've had to do furnace, siding, roof, a lot of things over these last 10 plus years. But I never looked at my 401k or my retirement savings as a place to take money. And I think that that's what's going on with some people. They see that as a place, a source of income, when they're not looking at it as letting it stay invested is the best thing for you long term. So what do you think about that, Press?
Mhm. I definitely agree with you on that. I am guilty of tapping into my 401k for emergency purposes, and my advice for that is to, if you can avoid not touching it, just don't touch it, because you're going to regret it in the long run, especially when the market swings upward and you're seeing and hearing about everybody else with these nice gains, and you're basically starting over from scratch. It's not a good feeling to have. So I will recommend you, if you don't have to touch it, please don't touch it.
Yeah, and so many penalties and things that you have to deal with. I just I hope that people really ask the right questions and think it through before they tap into that as a resource. Um, and then back to just staying consistent in general. Um,
Mm-hmm.
I think that I think we both have some things set automatically, or do you do anything automatic? I think that we need to really, if especially if we're on our own with doing our investing, if it's coming out of our paycheck and getting invested and it's your current 401k or 403b or whatever, okay, fine, it's getting done. But for those of us that have to do the investing ourselves, we're not at a job that has that. We have to do our own IRA, or we're just focused on investing on our own. We have to find a way to police ourselves and be consistent with our investing, and just not uh, taking breaks and feeling like it, we can just let this month go. We have other things going on. So I don't know. How do we, what advice would you give on staying consistent?
What I do it personally, I have my deposits automatically coming out of my bank account to my brokerage accounts. And I make it my business because I also wear a trader's hat to make my individual purchase orders daily. It kind of gives me the rush of trading, and on the days that I don't take a trade, because I get to go and look for price points and things of that nature and make my DCA purchases that way. And it kind of it's kind of fun for me, and it keeps me focused on managing my portfolios because I'm taking a look every single day.
Okay. I think I'm with you on that. That you know, when there are easy portions of my investing, it gets done, but I'm able to make, you know, I've shared on this channel a few challenges that I call it a challenge, but
Right.
after a certain amount of time, it's no longer a challenge. It's just a part of my life. So I, you know, get started with something and just incorporate it and keep it long term, like my $10 a day into VTI. I have no plan, or, you know, I have no anticipated end date for that to stop. So, you know, you just have to make a plan and stick to it. And I just add my money on
Right.
that weekly. When I get paid, I know $50 is going to go there, and that's going to cover me for that week. I don't keep a bunch of money there all of the time, you know? So, if anything, it might just be a little bit ahead because I do get 5.1 or 5.0% there also. But
Mhm.
you know, you have to make sure to make a plan that works for you, that you can be consistent with, and not always let those outside things of you know, eating out and a party and a this and a that overtake your or let you pull back on your investing. And I think, you know, once you make certain things automatic, then that's what it's going to do for you. So, um, anything else on your thoughts on anything else that you wanted to share on being consistent with your investing? I know the biggest thing is that, you know, compound interest is on your side, but what were your thoughts on it when you sent that to
Mhm.
me?
Also, I would suggest that you get yourself involved in some type of investing community because you have the camaraderie of others that you can bounce ideas off of each other and things of that nature. And when you don't see certain ones interacting in the chat, you can privately message them and ask them what's going on. You know, try to motivate them to basically stay consistent. Kind of like an accountability buddy.
Mhm. Yeah, definitely. Definitely good to incorporate something like that, because whether you're having a struggle or you have something, you have an accomplishment, you have to know who to share these things with, I think, in order to um, share it with someone that is going to be on your side and really cheer you on and support you. And I know personally, there's certain things I don't share with certain people because I just know that they're not going to be supportive of it. So, but something like, you know, a win in investing or something like that, I could share with someone like you. And I know that you won't think it's weird if I said, you know, my daughter's orthodontist is finally paid off in full or something, you know, like little things like that are goals when you're trying to be on top of your budget, as well as you know, you're investing, you're saving. Like, what you feel so good when you get certain things like that off of the books. um so are you ready to get into the market update from the past week or so? I see we have a question here about what do we think about Iran attacking Israel. Are you muted right now, Press?
No, I'm not. I'm not muted.
Okay.
Can you hear me?
Yes, I hear you now.
Okay. What do I think about Iran attacking Israel? It's tragic, one, and the market is definitely reacting because crypto moves 24 hours, and the stock market is closed right now, but crypto is still running. And just yesterday, crypto took a nice little splash down the, in the bear territory. So we just keeping an eye on that. Me myself, I will continue to DCA into Bitcoin, but as far as the altcoins, I'll trade not currently in any type of crypto trade. For this coming week, I'm expecting more pullback.
Yeah, I think you might be freezing up a little bit there. It's coming in and out. But yeah, there are a lot of geopolitical issues, war, Gaza war, these different things that are impacting. They are terrible things that are occurring, but as related to the stock market, they are creating a buying opportunity. And as an investor, I think that we should be focused on our investing as well as keeping money on hand so that we know so that we're ready to take advantage of any investing opportunities over the next few months. So uncertainty is going to disrupt the market. But, we have to look at it as a way that, like I said, as an opportunity if our focus is investing. We can't just sit by and let these opportunities pass us by. I know, until the last 5 years or so ago, I would just do my 401k. So I wasn't really in tune and paying attention to the news on the basis that I am now. I'm pretty much looking at the news and crypto and different things every day. But in general, we have to know where we're at with our investing and just not, like I said, just not let the opportunity pass you by. And if you are going to be investing in this way, you have to take the time to learn, unless you're just going to be doing just basic index funds or a mutual fund or something, ETF. It's good to have an understanding of what events are going on. Like, we're coming up on the Bitcoin halving in, I think, about 6 days or so. And that's something I wasn't in tune with Bitcoin cycles and things like that until recently, because now that I invest as an individual, not just through my 401k into a target date fund or something basic like that. If I want to be a part of investing into these things, I had to have an understanding of when to make sure to buy, to sell, to have my stop loss on, and things like that. So any news or thoughts on the Bitcoin halving or crypto news this week, Press?
Like I said before, I'm expecting a little more pullback as far as the crypto market and the stock market in general. So I'm just basically trying to find extra cash that I can invest a little bit more this week, if possible. Then if not, then I'm just going to continue to invest my normal amount like I've been doing. I'm not going to let the geopolitical events or any type of news scare me out of my investments. And I would, not a suggestion to buy, hold, or sell, but I would tell anyone else to do the same thing that I'm basically doing. Continue to DCA, continue to be consistent, because a lot of these investments that we're into at a discount price right now that you may not see again next year.
Yeah, so Vinny is saying that a dip is normal before the Bitcoin halving. I didn't look at the upcoming earnings that are coming out this week on major companies, so I'm not sure what to expect. I need to take a look at that later on today.
Yeah, I'm in the same boat. I haven't took a look at the upcoming earnings this week myself either. I've just been what I have been looking at is Palantir, because they have something to do with military artificial intelligence and things of that nature. So I'm looking at Palantir as possibly a shorter term investment / trade, something of that nature. So I've been pretty much charting that and looking for buy zones and stop loss zones and things of that nature, and take profit zones. because I'm really interested in trying to make some money off of these turbulent times in the geopolitical space.
Do you have any position right now in Palantir at all, or?
No, I don't currently have a position in Palantir. But
Oh,
I'm looking at it. I have it definitely high on my watch list. I'm keeping a close eye on it because I'm going to short quick profit and add it to my longer term positions.
Yeah, the connection seems a little bit bad. I'm not sure how it's coming across to other people, but it's coming in and out a little bit the way I'm seeing you. Can you guys let me know in the chat? Are you guys hearing Prez clearly? So yeah, another thing I was looking at earlier, well, a few days ago, we're on the first day of the week, so I can't say earlier this week, is summer seasonal weakness. So I'm not going to let this impact my investing, but overall there is, you've heard of this, Prez? You know what I'm going to say? I see
Kind of,
you
sort of. I'm gonna let you finish because you probably know a little bit more about it than I do. But I have heard it does sound familiar to me. But
okay.
I agree. I totally agree with you. I'm not gonna let anything shake me out of my positions or anything like that
Yeah,
because
yeah.
I've made that mistake before and I'll never do that again because these opportunities could pass you by just like that, and it's not good.
Yeah. Yeah, Trudy agrees with me that, or Trudy is seeing what I'm seeing, you know, that you are breaking up a little bit and there's a little bit of delay coming through when you're talking. But yeah, so overall, historically speaking, April to October, the stock market could be lower than November through April. And you know, even though there may be weakness, I think it's better to have your money invested because weakness in the stock market is still probably most likely going to be outbeat your money sitting at Wells Fargo or Bank of America or Chase. And it's good to just stay consistent. There are times of the year or times, you know, when you may want to go heavier if you are paying attention to the price points of your investments. But you know, having your money at your local bank, definitely not going to do anything. And, you know, as we get further into the year, as the rate cuts come and things like that, our interest rates on our APY on our high yield savings accounts may start to come down more. Mine has come down slightly, but even with that, I'm still going to stay focused on investing because investing is going to, I believe, be better than holding too much money in cash. Even at, you know, a good bank, like I think you use SoFi, I use mostly Discover for my accounts like that. But yeah, I just wanted to touch on the summer seasonal weakness as something that I'm not going to let delay me with staying consistent with my investing. So
I
you want to
totally agree with you on that. I definitely, me personally, don't want to have too much cash sitting idle and not working for me. I like to have all of my cash working for me at all times, basically. So I definitely agree with you on that. And to Breeze Omega in the chat, yes, I am from Baltimore.
Yeah, so Vinny, I mean late April, basically May through Halloween time, with what I was saying on the stock market. So do you want to talk a little bit about the CPI? I do have an image on, you know, what I wanted to share on where we're seeing inflation. Press, can you
Sorry about
share?
that. I was getting a phone call. As far as
Oh,
the CPI data, the CPI data came out about Tuesday or Wednesday, if I'm not mistaken,
mhm.
and it came slightly higher than expectations. So the market reacted to it. It pretty much sold off a little bit because they're expecting the Fed to start lowering interest rates in June or July, but it's not looking like he's going to be doing so. So the market is pretty much forward looking. So if the Fed is not going to be lowering interest rates in June or July, then the market is reacting to it. It's pricing it in.
Yeah, so we don't know when and the number of rate cuts. We're not definite on when that's going to happen, but their goal is to lower inflation. So I saw this image and it really resonated with me because I know it might be hard for you guys to see, but is this graph that is on Yahoo Finance? It shows you where inflation is, and auto insurance and rent are at the top, but you can see that very first line there is auto insurance. And I definitely have been seeing that. I don't really, I have to deal with my bills as they come in, the oil, the electric, in the summer, electric again, because you're cooling the house. In the winter, I might use some electric heat as well as oil to heat my house. So, but I'll tell you, my car insurance has gone up so much that I've just been talking to people about that particular bill. That one really got me because it went up it went up like about the amount of my monthly gas bill. My car insurance went up by the same amount. So for one bill to increase by the amount of another bill, it really impacted my budget. And I really, it's really disappointing. But when I saw this, I agreed with it 100%. Have you noticed that at all, Frez? Or, I know we're all seeing it with groceries. I know you've been mentioning that gas prices, you're starting to see them come up a little bit. Is there anything in particular that really bothers you the most when it comes to the inflation and the prices creeping up on us?
Mainly gas, mainly the price of gas, because I do a lot of driving, taking the kids to school and then getting back and forth to work. So it's mainly the gas that's really, really bothering me. Like I just put gas in here and I gotta put gas in here again. So it's mainly the gas and of course food. It's like the price of food is slowly going up, but the packaging size is shrinking.
Oh yes,
You understand what I'm
the
saying?
shrink, the
You get it less
shrinkflation.
for more.
Yes, yes. Um, there was another term besides shrinkflation. I can't think of what it is right now. But let's get back to what we were talking about.
Is it price gouging?
No, it was I don't remember what it was. It was like, okay, so we know what shrinkflation is when they're one of my coworkers going on about it because the K-cup pods at Dunkin' Donuts used to have 12 in it and now it has 10, and she's so annoyed.
Wow.
But there was like a soda can that they made it like taller and slimmer, but it had the same amount of ounces in it, but they were just charging a higher price point for it. So I don't remember what that's called. Let's just take a quick second to take a look at the chat. I want to say hello to Shalise. Thank you for
Hey, mommy
stopping
trader.
by. Breeze, Trudy, everybody who came in early. Thank you for Vinny for contributing to the discussion. Realist, Tamika Davis. Thank you everybody for tuning in today. And thank you for my mods for being here and helping out. I hope I said.
Quick question. Did y'all hit that like button? If you didn't, take the time now and hit it. Thank you.
Yes, please, please. So, Prez, yeah. How many people are watching and how many likes do we have? It should be matching up, guys. So wage price spiral. Let's see. Hey, David. So what were we about to go on to, Prez? I'm losing my train of thought.
Benny Mac called it wage price spiral.
Okay.
That's what it's called, wage price spiral.
All right. So at the top of the show, can you please tell us our topics for the week again? for the people who just came in a little late?
The current condition of the market, how we're navigating it,
Mm-hmm.
and overall, it's basically trying to give you words of encouragement to stay consistent. And if you haven't started already, now is a very good time to get started. A lot of good companies are at discount prices right now. You still have a few that are slightly overvalued and they're coming down to some good prices. But if you start with a small amount and consistently dollar cost average, I think you'll turn out really good in the long run.
Okay, all right. So, do we want to, you want to talk a little bit about more because I know there are some things that we're going to do a deep dive into, but like I noticed you have uh, in your portfolio, your YouTube portfolio. I know you have AI focused stocks, you have pharmaceuticals. Um, what do you think? What do you think there are some investments or areas to invest into that still potentially have an upside over the next 12 months?
Um, Now that I've been really trying to think real hard as to what sector to get into next.
Mhm.
So I will probably have to get back with you on that. I don't have an answer for that right this second, but I basically try to be well diversified across all of the main sectors in the stock market. There are 11 sectors in the stock market, so I try to be well diversified in the individual companies that I choose to invest into. I try to be well diversified, at least if not all 11 sectors. I try to get 4 out of those 11 sectors into one particular portfolio, and then I'll start a new portfolio later on down the road, and I'll add the other sectors that are missing. I try to have each portfolio complement each other. Is what I'm trying to say.
Okay.
So being well diversified and staying consistent in your dollar cost averaging, you'll turn out good in the long run. I can almost guarantee that.
So I know I was reading about Novo Nordic. I'm sorry if I'm butchering that a little bit. And Eli Lilly. Those are two pharmaceutical companies that have really been in the news and potentially could have still room for growth and upside over the next year or so. And we've been hearing a lot about them. They are involved in the obesity medication business, which has really been driving that area. The price target for Eli Lilly, which I believe you have in your portfolio,
Yes.
I think has been increased recently. So that's good news for them. I think it's been increased up to maybe $900 this year.
Yeah, that's the expectations. It's currently in the $700 range, close to 800.
Yeah, I don't hold either
Is
one of
pulling
these.
back a little bit when the stock runs up really quick. But the reason why I chose Eli Lilly, because at one point in time I was invested in the Johnson and Johnson. Their business model changed. They did a spinoff between the company, and I didn't agree with that. So I wanted to replace with a newer health company inside of this particular portfolio. So I chose Eli Lilly. Plus, they also make medication for diabetics. They make insulin and things like that. And I do have family members that are diabetic. So I want to try to capitalize on my return on investment by investing in the Eli Lilly. So I really like them as a longer term investment, and yeah, I like them.
Mhm. And Apple actually has had a lot of issues over the last 6 months. And one day last week, fell into the number 2 spot in my portfolio. Apple is always number 1, but Amazon overtook it for a minute or a day, and then it shifted back for me. How is Apple doing in your portfolio? And I have a whole list of some of the struggles that Apple has had, but they actually had the best week that they've had in, I think, since, I'm not sure when. It's been quite a few months since Apple's had the week that they had last week.
Right.
Um, any thoughts on Apple stock?
They haven't had a real good strong rally since before earnings, and I'm not worried about Apple at all. I'm taking a chance to accumulate more at this price because I entered into Apple a lot later than others that are in the current market. So I'm just taking my time and accumulating more on everything is going regularly scheduled as programmed basically. So when it's that week to buy Apple or tier 2 of my pyramid, then I go ahead and buy it. I don't, regardless of the price, I don't care about the price. But Apple can stay low as it is a little bit longer and let me accumulate a little bit more, and I'm happy with that. I'm not worried about Apple at all.
Okay.
Why I'm not worried? Because when them new iPhones come out, majority of you guys in the chat and people that you know are going to go buy that new iPhone. So win-win.
Mm-hmm. So some of Apple's obstacles that they have dealt with over the last few months is that they had to shift to the new port, the charging port on their phones. They had a revenue slowdown. They did not launch a new iPad, which is not the norm for them. I did a video a few weeks back where they were having legal issues related to their Apple Watch. There was also legal issues related to the Apple Store fee protest and a smartphone monopoly. So there's been lots of things, but I think Apple is a strong company, and I hope that they will come back from whatever they face, because it is one of the largest. It was the largest position in my portfolio, but I've been working to shift that. I am not. Prez is very good about his pyramid and his structure and his percentages. I think I have a strong portfolio, but I did not have the foundation. My foundation was more primarily in individual stocks, but I've been working to shift that, especially over the last, I would say, year and a half. And Apple also canceled their car project that they had in the works. So just a lot of things that could just cause a little rockiness in people's belief and sentiment for the company. But it's Apple. And
I'm smiling because I was just about to say the Apple car got canceled.
oh,
That kind of hurt me a little bit, kind of hurt my feelings a little bit, because when I first got into the market and I was, being suggested to look into Apple, the thing that drew me to Apple was the Apple car. Like, they about to make a car. Like, Apple is, they're gonna be at the top of everything, top of the class. So, that's what drew me to Apple when I was first getting into the market. The news that they were going to be unveiling a Apple car.
yeah, I wasn't really like waiting for it, but I had heard about it in the news, but I can't say like I was waiting for it. But I was surprised after, a company of that size putting energy and effort into something like that, for it to be taken off of the, supposedly no longer in the works is surprising. So, okay. So anything else that we want to cover for?
It had me pumped because I was into the electric vehicle space, over leveraged into Lucid and Neo and ChargePoint and things of that nature, because I was seeing a lot of Teslas on the street. I was trying to think in a psychological trader or investor type of mind frame coming into the market. So I'm like, okay, the EV sector is going to be the next big thing. Let me try to find the next Tesla, because Tesla was running up at the time when I first got into the market. Tesla was like $850. And then I literally watched it almost go to $1,200 in one day. So I said, oh, let me start looking for the next Tesla, not knowing what I'm talking about or knowing what I'm doing, and over leveraging myself into things like Lucid. The car looks awesome, but the company is trash. I didn't know that then. I know it now. And the same with Neo. I like the car, but the company is trash. And then it's a foreign company. So with all these foreign policies going on, they can snatch Neo off of the United States market just like that. You understand what I'm saying? So you definitely don't want to be over leveraged in some of these more speculative companies. You want to learn how to read the financials on these companies. And if you don't know how to do that, there are plenty of content creators on this space that we are on right now that will show you how to evaluate companies and things of that nature. Just type in the search bar how to read a PE ratio or how to read a company's financials, and you'll find a whole slew of videos for free that will show you how to evaluate these companies. You can also use the Moo Moo app, and once you learn how to read a PE ratio and things of that nature, you can then go to the Moo Moo app and use a lot of these tools that they have available for you there to evaluate these companies. You can get the analyst rating, You can get the predictions and when the earnings report is coming out. And these are things that you want to know because you're investing your hard-earned money into these companies and you don't want to invest blindly. That's the last thing that I would want for you to do, to invest into a company blindly, purely off of speculation and hope and prayer.
Mhm. Yeah, I shared like Prez was just mentioning, uh, reviewing the PE ratio on Moo Moo is very easy. I love the way they show it in a graph form, as well as just having. I shared this in a video that I did just a few days ago because Moo Moo is moving into having fractional shares, but it is really a great site or app for research, even for beginners. I'm sorry, Prez. I have somebody. A better solution. Okay, let's take a look at this. Do you want to take a look at questions now, or do you want to get started into the chat on the? Well, let's just take a look at the question. I think we can address it while we're going into our deep dive of what we're going to talk about today, which is going to be S&P 500. So first it says they're 54, plan to retire at 59, currently contributing $2,500 monthly to S&P 500 IVE, and their goal is to save $300K sitting in G Fund. Can you advise a better solution for $300K? So a better solution. I'm not sure what you mean. I think investing into the S&P 500, receiving dividends, building up that position is going to work for you. I think I don't know what your circumstances are that you're going to be able to retire on that amount of money, but we're going to take a look at some visuals, and we're going to be discussing S&P 500 investments that give you exposure to the S&P 500 and what the results can be, if what the amount you would be able to draw on it year after year, depending on the amount that you get invested into. So let's get started with that. I think we are kind of late into, we've been going for a little bit. So I don't know if Shalise is still here, but I think we both checked out her video recently on SPLG, which is a lower priced investment choice that gives you exposure to the S&P 500 that Prez wanted to do a deep dive into and compare against other investment choices. You want to talk a little bit about what drew you to it, or did someone question you about it? What made you want to talk about that today, Prez?
Basically what drew me to it was I actually slept on it because Miami Trader's been talking about it for a long time, and it just passed through my radar. You understand what I'm saying?
Mm-hmm.
But I was looking at the share price of VTI and VOO, and of course the share prices may be unaffordable for someone to start out buying whole shares, and we have this psychological thing in our head that we want to buy whole shares of things. And a lot of us have hangups about buying fractional shares just coming in the door. And I was looking for some type of alternative, a cheaper alternative that's similar to VTI. So I ran across SPLG and I did a little bit of research. It's pretty much the same thing as VTI and VOO. They're all pretty much going to give you the same return, but the only difference is because the share price is cheaper, you can accumulate more shares and have share appreciation as well as that dividend to aid you in your better return. So I'm not saying that SPLG is better than VTI or VOO. It's your own personal preference, but you do have that greater chance of share appreciation versus buying a share of VTI for $250, or I'm not sure the price of VOO because I don't even own VOO at all. But I know VOO is higher than VTI, but SPLG is a lot cheaper, and it has basically the same companies that are in the other two ETFs that I mentioned.
Okay, so let's first take a look at each of the okay. So this is the price for SPLG, currently 60.07. And let's see some of the other investment choices that we're going to take a look at. It's going to be VOO, and that is 469. And the one that our viewer mentioned, what was it? IVV? IVE? Is that a?
I believe so.
IVE is 178. What else are we going to look at? One of my other favorites, FXAIX.
Mm-hmm.
That's 177. And okay, I'm going to just throw in here. This is something we trade. We do not invest into it, but I know sometimes people mention it. We have the SPY at 510. So yeah, lots of reasons that I don't invest into the SPY. I didn't even realize it was actually that high. So let's get into it a little deeper. So as we just saw, SPLG is $60 per share. Mm-hmm. And I was just sharing before we came on, I was sharing with Prez a comment that I got from a grandfather that wants to invest for their grandchild. And they were saying that they have an account at Schwab that they want to invest for the grandchild in. But unfortunately, Schwab does not have fractional share investing for ETFs. They were hoping to do VOO on a set it and forget it type of basis. But they were asking me if there's some MAG 7 and maybe they could do the VOO monthly because the share price is too high for them to do it more regularly. So they would have to wait probably 4 or 5 weeks. And because we were about to we were in the works of working on this show, I suggested to take a look at SPLG as an option that they could maybe invest a share weekly, because that sounded like it was something that would fit better into their budget. And we don't have this obstacle. I don't think, because we use Fidelity, Webull, Public. We have many accounts where we have accessibility to buying fractional shares, meaning we don't have to have the price points that I just shared with you, the $469, even we're not talking about VTI today, which is a total stock market, but even VTI is $253 per share. We both usually invest at a minimum $5-10. On my Fidelity account, I can invest as little as $1. Sometimes my daughter's investments that I make on her behalf are below $5. But I definitely think that it's not an obstacle for me, but getting that question from that grandparent showed me that it's not just about preference. There are some people that are still investing in places where they have that limitation that they can't get fractional shares investing for certain investment types. Even Moo Moo, they have fractional share investing now, but it's not including ETFs. It's including basically individual stocks from the research that I've done so far. So with SPLG, is it something that you're going to start to incorporate into your portfolio? Because I know you said you don't do VOO. Are you thinking about incorporating this?
Am I thinking about incorporating SPLG or VOO?
No, SPLG as
I'm thinking about it. I'm actually thinking about starting a dividend portfolio in my Robinhood account, because Robinhood allows you to invest just $1 for fractional shares. Mm-hmm. In case anyone didn't know. And that dividend portfolio will probably be the first one that I start accessing when I enter my retirement stages, as far as withdrawing my dividends. But as of right now, when I do decide to start this particular portfolio, I will have my dividends reinvesting for me, which is called DRIP. To where as though DRIP stands for Dividend Reinvestment Program. To where as though you can set it to where as though when your dividends pay out, they'll reinvest into whatever company it is that the dividend pays you out in.
Mm-hmm. So back to so there's many ways to invest into the S&P 500. We're mentioning this one because it is a lower price point and gives the same benefits, or it lines up with some higher price investment choices that some of the ones that I just shared. So one that I think definitely would, in my opinion, and I think you'll agree with me, SPY is going to come off the list for me because it has the highest expense ratio out of everything that I mentioned. It has an expense ratio of 0.09, and its dividend yield is in line with the other investment choices that I shared. So we're going to get rid of that one.
It's also the most volatile.
Mm-hmm.
Because that's like the trader's paradise. It has violent upward and downward swings at any given moment. And if you're a new investor, you don't want to see those roller coaster ride swings in your portfolio. It could possibly discourage you to get out of that position at a lower price than what you got in. Buy high and sell low. And I don't want that for you. So yeah, SPY definitely should come off the list.
Mm-hmm. Mm-hmm. Yes, Shalise is agreeing with you over here, Press. And Shalise is still here. I wanted to say to you that I'm impatiently waiting for an opportunity to do something with you and Larry Jones. I'm waiting to hear from him, Shalise. I'm looking forward to that. So I found this visual I wanted to include in today's live because there are many different ways that you can get exposure, but we're going to highlight a few, not everything that's on here, but there's a S&P 500 line, and VOO, IVV, SPY, and SCHX are some other investment choices that give you exposure to the S&P 500. So depending on what broker you use and where you're going to be investing, there are lots of ways to get exposure, but I want to highlight that you need to weigh certain factors in choosing your investment choice because they are not always equal, just like the one that we just took off the list, which is the SPY, which is listed here. It's a State Street investment. It's listed under the State Street as an investment choice. So back to the ones that I think are better choices are, do you have any other things you want to share on the SPLG before I keep talking, Prez?
No, I was actually done talking about SPLG.
Okay.
Like I said before, I like it I would like for it to go into my Robinhood portfolio that I'm going to be starting soon. And yeah, that portfolio is going to be typically more ETFs than individual companies, and that would be one of the ones that I will be adding there. I think I'm going to like it.
Yeah. So SPLG and VOO both have expense ratios of 0.03, and their dividend yields are pretty much the same, about 1.3%. And FXAIX is an investment that I do in my portfolios at Fidelity that gives me exposure to the S&P 500. Its dividend yield is 0.015, and it has a similar dividend yield. So I think those are all good ways to get exposure to the S&P 500. As well as the IVE. I didn't pull information on that one. That's the investment choice that the person in the chat earlier, was it Lenny? No, it wasn't Lenny. Piper mentioned. But I did have something else here I wanted to share. Let's take a look. They were saying they had $300,000 invested. So this is kind of, FIRE stands for financial independence, retire early. So whether you're retiring early or you plan on retiring at the regular, the regular scheduled time for you, whether that's 67 or even later, understanding how much money you have to have invested in order to pull a certain amount on a yearly or monthly basis is something that you need to work with whoever your retirement account is with, so that you can see if you're on track. Like the person in our chat earlier mentioned that they have $300,000. This graph has 250 and 500,000 as the bottom levels of investment amounts to have, and the rate at which you would be able to pull or draw from them without really impacting your initial investment, just basically taking out the gain that you have from dividends and hopefully increase of the stock price. So were you online the other day, Prez? I think you were, when Keenan was kind of reviewing this and saying that this is really his inspiration on just knowing what he'll be able to accomplish by investing long term.
Yes, I was online, and I was trying to get him to blow it up so I can screenshot it. But I eventually went online and found this particular same photo of myself and downloaded it to my phone.
Yeah.
So that I can constantly look at it on a daily basis to remind myself to stay motivated.
Mm-hmm.
So yeah, it was definitely a good piece of information because it pretty much gives you a guide as to where you need to be.
Yeah. So, man, I don't want to mess anything up while I'm looking at this, but let me see if I can bring this over here. So what do you think about our viewers' comment about having $300,000 and wanting to or planning on investing at an age earlier than 60? I know we don't know their circumstances, but just knowing what we know so far, what do you think about that? Do you think that's going to work out?
Me personally, it's not enough for me.
Yeah.
Me personally, it wouldn't be enough, nowhere near enough for me. I'm trying to be up in the fat 5 bracket. You understand what I'm saying? So that's why I advise, well, not advise, well, what I would do, I invest first and then I learn how to trade so that I can shorten that time it would take for me to reach those goals. I can take some of my profit from my trading and add it to my long term. That's the name of the game here. You want to have the younger you take care of the older you. So that's why I incorporate day trading into my investment strategy so that I can play catch up, because I'm already in my 40s and I don't want to work till my 60s. I want to leave the game in my 50s possibly.
Okay. Yeah. So yes, it really it's these are big numbers, but this is what you're going to need, because we don't know. We don't know how long we're going to be here for, and we're not sure on how many years we're going to need to draw from this. So I'd rather be over prepared than under prepared, because I want to know that I'm able to live comfortably going forward. And we can only work so many years, especially if we have a physically demanding job. So let me pull this down.
Then I also would like to add, after retirement, it still doesn't stop for me. I still have children. I still have grandchildren. The last thing I want them to have to do is to work anywhere near as hard as I have in my life. So I'm building generational wealth here, and that's also the name of the game. You understand what I'm saying? So yeah, you retire with a nice, piece of change. So you want to set your offspring and your future generations up with a clear path. And you also want to educate them on how to manage these funds you're leaving them when you're no longer here.
Yes, yes, definitely. So we have Trudy is mentioning some funds, some other ETFs. Not sure what these track, VGT and SMH that she heard Larry mention that she's going to be doing some further research on. I can pull them up on the spot, but I do not have anything, I don't have any insights on them without taking a look at it quickly. And someone else is mentioning STRV. Are you familiar with any of the? They're all familiar to me, but I would just need to take a look at them. Any of them? Do you have any information on any of them off the top of your head,
Not
Prez?
right off the top of my head. I would have to really do some research on these other ETFs because, like I said, majority of my money is in the VTI. Like I keep it simple. So if VTI is offering me almost 4,000 companies in this one basket, then it really isn't too much need for me personally to go searching for other ETFs. You understand what I'm saying? That's
Mm-hmm.
where me acquiring a skill on how to pick individual companies come into play because I want more exposure into individual companies versus ETFs because I've learned throughout my brief career in the market on how to evaluate these companies.
So for those of you that are newer to investing or just maybe don't have the time or want to take on the responsibility of investing into individual stocks, by investing into an ETF, like we're mentioning here, this SPLG or VOO or VTI, you're going to get, hundreds, if not thousands of stocks within your investment choice. You're going to get diversification, lower risk, and it's a managed portfolio. That's what leads to me mentioning about those expense ratios. Those are the kind of management fees that you're going to have to pay because the fund is because of the fund managers of the particular brokerage that you're choosing, Vanguard or Fidelity, for example. As opposed to when you invest into an individual stock like Microsoft, which I believe Prez does invest into Microsoft. I do not have Microsoft. I don't have direct exposure to Microsoft. You then have to be kind of more mindful and realize the potential risk. And you are the person that is the manager of it to know when choosing your price points on when you want to buy, potentially in the long term, when you may want to sell it. You're going to have to be responsible for that. But when you're investing into an ETF, it's managed and they're going to rebalance that for you. For example, I've used this example a few times that 20 years ago, Walmart was in the top 7, and now Walmart is down in between, say, 20 to 25 in the listing of the Fortune 500 companies. So that's something that is just going to kind of balance out for you. They're going to make those adjustments as these companies grow. They're going to move further up to the top of the list, and you don't have to do the work on trying to figure that out. You're going to have exposure, a little piece of all of them, just by investing into an ETF. One of our favorites is a total stock market. One of both of our favorites is a total stock market ETF, which is VTI. If you guys didn't know, if you've been here before, I'm sure you know. So of the S&P 500 investment choices or ETFs and things that I mentioned, I did take a look on Morningstar, which is one of the world's largest investment research companies. And SPLG was not listed there. Was not rated there, but VOO and FXAIX are both gold level in their rating system. But from what I looked at with SPLG, it has a lower share price at around $60 right now. It has a dividend yield in line with the other investment choices that I mentioned, as well as the same expense ratio as VOO, which is just slightly higher than the FXAIX. So it's something that I would definitely consider incorporating into my portfolio. Shalise, Mommy Trader, in her video, she mentioned that it is something that was a kind of under the radar investment that a lot of people don't know about. And I might have invested into this instead of VOO if I had known about it sooner.
Same here. I totally agree with you. Well, I wouldn't have chosen over VTI per se because VTI was pretty much beat into my head when I was learning. Like everybody was saying VTI, VTI, VTI. So once I really realized what VTI really was and what's inside of that basket that we call VTI, I was pretty much sold after that. I said almost 4,000 companies in this one basket. You can't beat that. You really can't beat that. There's no need to even try to beat that. But what I'm trying to bring to you guys today is there is another alternative. If that share price that you see is your hangup as to why you're not currently buying VTI.
Yeah. Okay. So let's take a look at the chat. Are there any other questions that we missed? Anything else in the news, Prez, that you had on your mind?
No, not really. Nothing else in the news that's concerning me right now. Like I can care less about what the politics are doing. Now the geopolitical thing, I know it affects the market. So if it's any type of news out there that doesn't directly affect the market, then I'll listen to it just so I can be in the know. But I really don't. It really doesn't concern me because at the end of the day, like I said, the market is forward looking. So I'll train my brain to be also forward looking. I'm looking 5, 10 years down the road versus what's going on right now. But what's going on right now is good to know because I can act accordingly. But at the long run, I'm looking 5, 10 years down the road.
So as far as ETFs go, ETFs are exchange traded funds. So like we are always describing, they're a basket of stocks. They give you, a small percentage of a lot of different investment choices. And you can go through and find you don't have to do, I think my preference is, and some people may think I have redundancy in doing both, but I do S&P 500 and total stock market. But if you want to have, for example, exposure to technology, all technology, you can find an ETF that has that. That is what one of the VGT that Trudy mentioned a little while ago. That's what that is. That is a Vanguard IT index fund. It's currently $514 per share. But you can find various ETFs that give you exposure to, say, not just the US, you can get international funds. You can find a fund that gives you exposure to whatever sector or area that you want and not have to pick individual stocks on your own, because you may have, it's a way to build your portfolio, have stability, steady growth. You may not have the growth that you can achieve by getting into an individual stock, but you also are limiting the responsibility that you have to take on by keeping track of and doing the research. And maybe not doing the research is the problem, that you just kind of people invest into things and they're not keeping up with watching it long term over the years, and they could potentially lose money because that investment kind of pulls back and over the years is not what you expected. So the performance declines and you didn't have a stop loss. You didn't get out of it and move on to whatever is the next big thing. You didn't sell out on, I don't know what I want to use an example, whatever stock, and move into the ones that are kind of in the the Magnificent Seven. So, and what was the other one that Trudy mentioned? It was SMH. Oh, that's a semiconductor ETF. So yeah, some things to take a look at and think about. But yeah, you can definitely get exposure to different things through an ETF, as opposed to taking on a responsibility that you may not want to take on.
Right.
So, Frez, do you have any definite plans on your investing into SPLG? Or are you still working on your plan on when you're gonna, like, where it's gonna be in your portfolio percentage wise and how much you're gonna get started with and stuff like that?
Yeah, I'm still working on the actual plan as to how I'm going to incorporate it into. I'm still working on how I'm going to incorporate it as far as the allocation size and things of that nature. But I was thinking about doing it like start the portfolio of VTI at 60% and then have 4 other ETFs in different sectors and have them at 5% each on level 2 of my pyramid. I was thinking about doing it like that, but I haven't 100% decided as to which way I'm going to navigate this yet.
All right, so I think that's going to be it for this. I think this was episode 9.
Yeah.
So I hope you have a good rest of your week, Prez. We will be working on our topic for next Sunday, and hopefully we will be back again next Sunday, 3 p.m. Eastern Standard Time.
As long as I'm breathing.
Check us out during the week. Prez has been going live, stock market, opening bell, 15 minutes before opening bell. He's been going live on his channel 3 days a week, Monday, Wednesday, Friday, as well as giving an update on the YouTube portfolio. Since I gave your whole schedule, Prez, why don't you say something about what goes on over at my channel?
Okay. If you're not already subscribe to Lisa J's channel. She pretty much specializes in educating you on how to invest for your children, as well as giving you insights on how she's navigating this market. So be sure to check her out because she offers some great value and content, and I really value her opinion on how she invests. So yeah, it's a good look, and subscribe to us both, and be sure to always tune in because I'm going to always try to provide you value. And I'm sure Lisa J is going to do the same thing. But thank you guys for your time and coming out and spending the afternoon with us. And it's really been a pleasure. You guys showing me so much support as well as Lisa J. Yeah, that's pretty much all I got for you guys today.
All right, then. Thanks for tuning in. See you next week. Bye.
All right.